Ladies and gentlemen, good day and welcome to Dodla Dairy Q3 FY24 Result Conference Call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you and over to you, sir.
Yeah, thanks, Muskan. On behalf of ICICI Securities, we welcome you all to Q3 FY24 Results Conference Call of Dodla Dairy. We have with us senior management represented by Mr. Dodla Sunil Reddy, Managing Director, Mr. B.V.K. Reddy, CEO, Mr. Murli Mohan Raju, CFO and Finance Controller. I congratulate the management for excellent set of numbers in Q3 FY24 and hand over to the management for the initial comments on the quarterly performance. Then we will open the floor for question and answer session. Thanks and over to you, sir.
This is Sunil. Thank you very much, Aniruddha, for giving me this opportunity. Hello everyone. I welcome you all to Dodla Dairy Q3 and 9 months for the year 24 earnings conference call. I hope you all had the opportunity to go through the company's Q3 and 9 months ended 24, financial year 24 earnings collaterals uploaded on the exchange. I'm happy to share that Dodla Dairy was able to reap the benefit of the peak 2023-24 flush season, coupled with positive festive spending, enthusiasm, and deepened procurement and widened distribution networks. Dodla Dairy revenues grew by 12% year-on-year to INR 2,338 crores in the 9 months ended the financial year of 24. The company's value-added and fat product sales continued its growth momentum, clocking a 15.1% year-on-year growth at a 640 crores thanks to the robust distribution network and strong brand recall. Dodla Dairy's VAP sale pie also has expanded by 95 bps year-on-year to 28% of the overall revenues in the 9 months for the year 24. Dodla Dairy has strategically positioned its processing plants in the key markets and procurement clusters. The company continues to strengthen its procurement capabilities during the quarter. Dodla Dairy achieved its highest procurement of peak procurement at 17.5 lakh litre per day, registering a growth of 36.7% year-on-year. The company's processing plants are fully automated, resulting in enhanced operational efficiencies and product standardization of the dairy and VAP products. It is indeed satisfying to see our team effort fructifying with the company's EBITDA margins reclaiming the double-digit mark after 8 quarters. Dodla Dairy EBITDA margin expanded by 315 bps year-on-year to 11.1% in Q3 for the year 24. Dodla Dairy continues to strengthen its integrated business model proposition through organic and inorganic growth opportunities. Since inception, Dodla Dairy has expanded its capacities of 7 plants through greenfields and 7 plants through brownfields. In India, that is in mostly the states of Andhra Pradesh, Telangana, Karnataka and Tamil Nadu, and also 1 plant in Africa, in Uganda specifically. Additionally, during the ongoing financials, we have scaled our Orga feed, which is our cattle feed business, capacity from 80 metric tons per day to 480 metric tons per day in the Q2 of FY24. Our Country Delight Dairy, Kenya, has also added an additional processing capacity of 1 lakh litres per day in January 2024. Additionally, our team is also scouting for appropriate land for building a dairy plant in Maharashtra. We will keep our shareholders and analysts and investor fraternity posted about any further developments with respect to the Maharashtra plant through exchange filing. We aim to maintain our growth momentum by judiciously investing in our brand. During the January of 2024, the company aired television commercials with a long-term view for the first time on a leading regional and digital channels to tap the festive vibes of Makar Sankranti and Pongal. Dodla Dairy team is actively working towards accelerating its go-to-market strategy, delivering its strong brand and consistently deliver consumer delight through its diverse product portfolio. The company strives to satiate the evolving consumer demand through its diversified product portfolio and widening its presence. The management is committed towards delivering long-term sustained growth with its robust business model, strong balance sheet, and net debt-free status, coupled with adequate cash balance for organic and inorganic growth. Lastly, my sincere gratitude to our esteemed stakeholders for the continued trust of Dodla Dairy's vision. We continue to strengthen our governance framework through our trust on ESG practices. Dodla Dairy's team remains committed to support its dairy farmer network and fulfill the consumer health and nutritional needs through our milk and VAC products. Now, with this brief, I would hand it over to the CEO of our company, Mr. B.V.K. Reddy. Over to you, sir.
Thank you so much, Sunil sir. Very good evening to all participants. Our team ability to maintain competitive edge in the dairy industry has propelled us to conclude a healthy quarter with a revenue growth and strong key performance indicators. We are continuously enhancing our footprints, strengthening our pan-India ambition. As on 31st December 23, we procured milk from around 1.4 lakh dairy farmers, out of which 90% are provided with regular direct payment in the bank accounts. Our direct procurement model has further strengthened, wherein we are buying almost all the milk directly from the farmers across over 8,600 villages, resulting in cost saving and establish deep-rooted relations with them. The company continues to grow its farmers network through several farmer-centric approaches, which include transparent milk pricing, providing quality cattle feed at a competitive price, prompt veterinary service for the animal health, and several knowledge-enriching programs for the milk farmers. Dodla Dairy AlphaStreet division keeps supporting the agricultural community on the dairy industry. AlphaStreet sells its cattle feed directly to the farmers through its procurement network, thereby strengthen its relationship with farmers by optimizing livestock health and enhancing the productivity. Dodla Dairy continues to prudently invest in AlphaStreet to tap huge untapped cattle feed market potential. Accordingly, the company total cattle feed plant capacity was ramped up nearly 6 times to 480 metric tons per day. During H1 FY24, AlphaStreet revenue stood at 60 crores in 9 months 24 with EBITDA approximately 5 crores during the same period. In terms of our presence, we serve 13 states in India, supported by 15 processing plants with nearly 22 lakh liters per day capacity. We currently have 139 chilling centers plants as on 31st December 23. We have 638 Dodla retail parlors. We also have a strong network of 2,100 milk and milk distributor channel. We have around 2,500 agent networks that all established in many areas of the country. Dodla Dairy looks forward to strengthen its grass-to-glass business model, laid with backward as well as forward integration. Our presence in the entire dairy value chain, including research, procurement, and storage, processing, distribution, and cattle feed, amplifies the management clear focus on the long-term business vision. Accordingly, the company aims to enhance operational efficiencies with automation, digitalization initiatives, and increase the distribution network, hereby delivering a sustainable value for our esteemed stakeholders. That concludes our update on strategy, which we believe has been a positive in most yardsticks. With that being said, I would like to open the floor for the question answers. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while question queue assembles. A reminder to all participants, you may press star and 1 to ask a question. The first question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, what was the average procurement price and realization price for this quarter?
Aditya, thank you. That's at the Concall level, or we'll give you the standalone level. The Concall price for the quarter ended
15.54.
No, 57.49. Sorry, sir, that is the sales realization. 37.67 was the procurement price, sir.
Got it. And what was the amount of covered sales for this quarter in rupee terms?
Amount of? I can get the question, sir. Good.
Yes.
1 minute, sir.
very last in this quarter.
Yeah. In terms of percentage of curd sales has been, just 1 minute, sir. In terms of value, I can give you just what's the value in terms of curd?
Value curd is
For this quarter?
For this quarter.
It's 132 crores, sir.
Got it. Okay, sir. And sir, we have been stocking.
And by volume percentage, I think for the Q3, it was around 20.9%, sir. Sorry.
Got it. And sir, we have been stocking up on inventory for the last 2 quarters. So is it reasonable to assume that we will be able to lock in our margins at these double-digit levels for at least the next 1 to 2 quarters? And the second half margin of financial year 25 would be dependent on the fresh season next year?
Yes, sir. See, because now, like we have been telling earlier, now we are trying to actually strengthen our procurement and not try to match it exclusively with our sales. So we will have inventory build-up that will happen, but it's not comparatively, it's not going to be a substantial large inventory, because if you look at it, if you're handling 75,000 tons of milk and milk solids, our inventory build-up would be to the tune of 4,000 to 5,000 tons of, let's say, powder and ghee, which is not a large volume. You are right in saying that it was the next half of the year will depend on what the prices will happen. It might have an impact. But to explain it to you, if for some reason the prices of powder and ghee in the commodity sale are not going to go up, means milk procurement prices will remain lower and will keep the profitability up on the milk side. If, for example, the milk and milk prices, milk availability comes down and the commodity prices will go up, we will have our own commodity to use up for our own consumption. So overall, I think it will help us in maintaining more stable numbers as we go forward with the change that we are doing now. So in terms of procuring more, keeping our own procurement, which will bring down our procurement price effectively, and the impact of the inventory change will not be that much on the numbers.
Got it. And so generally in Q4, are the procurement prices lower in Q4 as compared to Q3?
Prices in Q4 are maintaining almost the same stable levels as Q3, sir. Invariably, a past trend, we used to see an increase, but this time we're not seeing an increase, and we are assuming that the price will not go up for Q4, sir.
Got it. And sir, my next question is on demand. So we had talked about inflation affecting the demand for our products in the last call. So do you feel the situation is improving, or is it similar to last quarter?
I think the situation is slightly improving. So basically, I think it's also, as we keep saying, a little bit weather-driven. Once the temperatures are moving up, let's say even for Jan, now the numbers are tending to move up more than what they were from the last December numbers. I think as we go forward, it will start to move up. So very broadly speaking, the shrinkflation that happened when we took the price increase, it was not necessarily a simple price increase that happened, but also the volume increase in a per pack basis that happened. We are assuming now that the consumers will start buying more volume in terms of if somebody was buying 1 pack with a lower volume, and now they've got used to it and they get adjusted to it from the next year onwards, it will go back to the 2-pack volume that they'll be buying, and we are anticipating that our sales will increase. More than that, like we said, about the ads that we are putting in, trying to create more infrastructure, we are also trying to do more active work pushing our sales volume down.
Understood, sir. And sir, my last question is on Africa business. So our sales and margins have dropped in Africa. So what has led to this, and why have the tax rates increased in the Africa business?
So basically, in EBITDA, we had a small one-time hit of a local issues of some sports and which somebody had done. Therefore, it dropped down a little bit, but otherwise, I think it will continue to be maintaining the same as the previous year, or improve as we go forward.
No, compared to last year, it's not dropped actually, slightly, but it will come.
It will come back now.
Come back.
Okay. And so when would we see the benefit of this new capacity which we have commenced in Kenya? So what kind of growth and margins are we looking for Africa in the next 2-3 years?
Yeah, see, this month only we commenced about commercial production, and the capacity of the plant is 1 lakh liters per day. And we are hoping that, 20,000-30,000 liters, it will catch in a couple of months.
In a couple of months, sir. So I think 2-3 years, we think we will do the 40-50% at least comfortable operation and keeping it to whatever seasonalities are required, or more than that.
Sure, sir. Thank you, sir, for answering my questions.
Okay.
Thank you, Althea.
Thank you. The next question is from the line of Dennis from Spark PWM Private Limited. Please go ahead.
Hello, am I audible?
Yeah.
Congratulations, sir, on a great set of numbers. My question is with a bit longer perspective. Now that we have around 250 odd crores of investments or liquid cash in hand, plus a steady operating cash generation, what is the capex plans for next 3 to 4 years, and how do we see the capacities or the funds being utilized? And are we going to reward our shareholders if the capex plans are not there in place?
So, broadly speaking, so if you look at it like I said earlier, now we are moving forward to expand to go to our larger number of volume. So with that, I think we will start using more of our money, A, in inventory, and B, in terms of considering our future growth plans of the plant in Maharashtra and the procurement to increase. We will not be having that much of cash surpluses because we are now planning according to the cash that we have for a faster growth rate. But yes, we will be looking at rewarding the shareholders as we go forward with the smaller, whatever the leftover cash is with us. We will look at it as to reward the shareholders. So if there is a build-up of more, we will be rewarding the shareholders. Otherwise, we will be majorly concentrating on growth. So rewarding the shareholders will be a smaller portion, but I think for the next 3 years, we have clear path of growth.
Understood. So in terms of your Maharashtra expansion plan, what is the kind of capacity that you are considering, and what will be the amount that will be deployed for that?
We will look at it as a 5 lakh litre capacity at least to start with, sir, and look at between 150 to 200 crore of capital deployment on that plant alone. But the supporting structure that we will require in the chilling centers and all that and the other areas will take another 50-60 crores. And our regular capex for market and market expansion will be at least 30-40 crores a year. So based on that, we will be looking at the next 2-3 years a spend of at least the 400 to 500 crore range to take us up in our growth path. Because now, if you are saying that we are in India handling around 15-16 lakh litres, even a 20 lakh litre jump will require that kind of a capital to reach 20 lakh litres.
So 5 lakh litres per month?
5 lakh litres per day, sir.
Per day, okay. Thank you so much.
Thank you. The next question is from the line of Prashant Kutti from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity, sir. Congrats on a good set of numbers. But just 2 things over here in terms of your numbers. One is procurement has been extremely strong. Could you probably help us understand which regions really kind of helped probably drive this in terms of the procurement part of it? And secondly, like you highlighted that we are right now probably building an inventory. The milk sales is probably not being commensurate, and so is the case with curd sales as well. So just want to understand how...
The second question, I couldn't hear you clearly. Can you come to the second part of the question? The first one was...
I was just saying is, what is the procurement? Which are the regions is one? Yeah. Can you hear me now? Is it better?
Yeah, it's better now.
Sure. I was just asking that in terms of procurement, if you could just kind of highlight which are the areas where you're actually seeing a lot of traction coming in, and is this traction kind of expected to accelerate as well? Because we seem to be now well ahead of our targets in terms of our milk procurement targets. That's one point. Secondly, in terms of the sales, doesn't seem to be commensurating in terms of the procurement numbers, be it your milk sales or your curd sales, even to an extent, even the value-added sales as well. So we spoke about adding inventory, but just wanted to understand how the overall demand situation, if you could just give us some sense of that.
Yeah, so I'll just give you the broad explanation and leave it to Stephen in more of the numbers. So 2 things that you are asking is procurement, we have very strong growth, and where is the traction coming from? And the second part is relating to the sales and the differential of what we are going to do with the inventory build-up that is going to be happening. So I will take that as the 2 questions and go ahead and say, regarding procurement, now we are concentrating on the states of Tamil Nadu, Karnataka, Andhra Pradesh, and Maharashtra. Telangana is a very small portion. I think effectively the team playing between whichever year the prices are cheaper, increasing growth, and other areas is where they're able to keep our prices down. And I think more in terms of direct to the farmer, quality improvement, and a lot of other activities is what gives us the traction in procurement to keep going stronger. BVK will go into the specifics of which region and where the traction is more stronger for us. The second thing, when we look at it from the sales point of view, if the inventory buildup does happen, it happens on two products. One will be fat, which we call it as butter or ghee, and the other will be in powder. Last year, we were net buyers of around 3,000 tons of powder or so. And this year, I think instead of being a net buyer, we'll become a net seller maybe, depending on our own captive requirements and how the procurement plays out for the next 6 months. And the fact we can either try to enhance our ghee consumer sale, which should add to our bottom line better, or we will look at it as our bulk volume. So I'll hand it over to BVK to give you specifics on traction of which states our procurement is at the moment and where we think the traction in the states will be later. Good.
Yeah. See, compared to all those states, AP is still, leading number one position, followed by Tamil Nadu, then Karnataka, then Maharashtra. So our numbers in 5 lakhs plus we are collecting 9 months average from Andhra Pradesh, and close to 4 lakhs, 5 lakhs is Tamil Nadu, and close to 3.5 lakhs is from Karnataka, and around 2 lakhs from Maharashtra, and small quantity around 30,000 liters from Telangana.
So I suffice to say that Tamil Nadu seems to have seen the sharp amount of rise in that sense, because we were already doing a good number in Andhra Pradesh before as well, right? So I presume Tamil Nadu probably would have been a positive surprise.
Yes, Tamil Nadu gave us traction this time. We got larger number of increase in Tamil Nadu comparatively. I think we are now concentrating also in terms of Maharashtra, which will be the next larger traction for us, and the others will grow in the same steady state.
Understood. And when you're talking about sales, so like I presume you said that you just said that going forward you're not seeing too much of margins to be under pressure. But I didn't understand one point, that why are we building up so much of inventory when we actually feel that probably it's been almost 1.5 years that the milk inflation has been actually hurting us in the past. But now we're probably seeing a sort of steady state kind of numbers. So any reason as to why you probably feel that there is a need for a lot of inventory to be held in this?
Yeah, I will tell you that. See, now we know inventory, we have only two issues. One is the fat, another one is SMP.
Yeah.
SMP, normally all these years, we used to buy SMP in the fourth quarter. See, we were net buyers. So we used to buy roughly about 4,500 tons every year from December onwards till March, even sometimes, April, May, also depending upon the requirement. So this year now they won't be any purchase, SMP purchase from outside party, because we have our own SMP. So that's why your inventory looks like it shows, inventory number, it is more. And except the fat, the only fat, fat also nowadays, because high fat milk is going day by day more and more quantity. So our fat consumption also, for our own consumption itself, we require 1,500 tons fat also. Because last before year also we purchased butter from outside, third party. So this year, maybe slightly little surplus only fat that we are going to sell it outside. SMP is not the big issue. SMP we are going to consume ourselves.
And Prashant, like you were saying, right, we are now moving away from being a net buyer.
Yeah.
So we can err in terms of being a net seller rather than being a net buyer. The double advantage we get is by increasing more and more of our own procurement. If you look at the overall 5-year period, it will stabilize the margins.
Understood. And this quarter margins wouldn't include any kind of sale of powder or fat sales, any number in that to quote, which would probably would have benefited us in that.
Might happen only maybe 6 months later. So fat or powder sale, depending on how the flush pans out as we go forward, if there is even more and more milk coming in, we might have to end up doing that, but not an immediate. So we're waiting for at least another 2-3 months when we make that call.
Yeah, nowadays, see, the demand is also very less, and people who are not able to hold this SMP and fat, they're only selling for distressed price. So now we don't sell it now, right now. We'll hold it for some time and then we'll see.
Understood. Sure. Thank you so much, and all the very best to you.
Thank you. The next question is from the line of Maithili Balakrishna from Alchemy Capital Private Limited. Please go ahead.
Sure. Coming back to that volume point, right, which I think most people have raised. If you remember during last quarter, you had talked about the fact that volume per pack has been reduced. There have been so many rate hikes, and that is affecting volumes. Do you see a trend of that reversing with time in this particular quarter? Or do you think it will take a little longer for us to reach normal growth levels?
I think normal growth levels we will know by March and mid-March towards end of April. Normally as summer sets in and temperatures go up, we will see the change in the consumer pattern. That is when we'll have to wait and see, and we will know by then what the trend is going to be like.
Got it. And then in terms of growth, right, we had mentioned that our current cash and we are sort of increasing our capex in line with our growth expectations. So what is the sort of growth expectations that we see for ourselves over the next 2-3 years?
As usual, on revenue terms, we are still trying to target the 15% value growth, revenue growth. And because now, we have the three divisions which are working, if I broadly bring it down to the dairy in terms of Indian dairy operation, our cattle feed and Kenya. Cattle feed and Kenya alone should contribute another couple of 100 crores of revenue in the current year itself in terms of the growth that we are anticipating. And even the kind of inventory that we have built up, even our own captive use of that inventory versus selling it or whichever way we look at it. To maintain for the immediate year, the 15% growth is not a challenge. We'll be able to manage that easily.
Got it.
And the capex that we are doing for the future and continuing to grow is to keep in the same lines and trends.
Got it. A 15% odd level of
revenue growth.
Got it. And in terms of the margins, right, while obviously we will see some bump up during this flush season, but over a longer term range, what would you sort of target as the margins for the company?
Ma'am, if you look at it as a 3-year cycle, because as we've seen from the last year, this year cyclicality, how it affects the dairy industry, I think looking at higher single digits to coming closer to double digits is the norm that we will try to target for as we go forward now.
So 8 to 10% kind of a range.
Yeah, for the long term.
Got it. Also wanted to check with you on your tax because that seemed to have shot up, especially in the subsidiaries. So wanted to check on any one-offs which is there in that item.
Yeah, there is a one-off, ma'am. It's basically related to our international, which Murli will explain.
Yeah, ma'am, this year we have declared a dividend late Friday in Uganda, 35 crores, which was came to a Dodla holdings in Singapore. At a consolidated level, it was called off 35 crores of receipt and payment, dividend and paid and receipt. And whereas the taxes implication is there, 15% of tax in Uganda and 17%, that is 32%. So there is a 10 crores of hit only on the tax item. That is the reason this quarter seems it's higher side, but going forward that will not be there.
Got it. Thank you. That's all from my side.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Richa Mehta from Green Age Wealth. Please go ahead.
Hello. Yeah. Congrats on a very good margin performance. So I just had 2 questions broadly. The first is that, since, the price hikes taken, maybe little price hikes or, by reducing the grammage or the volumes per packet, right? Since that has been taken and that's already in the base. So how do you see, this future growth that you have guided for 15-20%? How much of that would, be volume driven and, this balance between volume and, the price hikes that we have taken? Because if we see recently, the volumes have been muted because of the consumer sentiment, not just in dairy, but, across the consumer segment, right? So that's question number 1.
Good, ma'am. You want me to answer this and then we'll ask another question, ma'am?
Yeah, would be great if you could go ahead with this.
Yeah. So I think 2 things. Now, first of all, your broader thing and BVK will also step in. To look at the short term of the current year of growth, like I was explaining earlier, it is not a bigger number for us because even if I look at it as a 3,000 plus kind of a number that we are targeting for the year end, and if I take the 15% growth, which translates to around 450 crores kind of a requirement, cattle feed and Africa alone will contribute to us the 200 to both. And so 175 crores or 200 crores will just come from these 2 alone. So to get even a 5% increase in regular volume growth, if we get in our day-to-day operation of the dairy, we will achieve that 15%.
Yes, madam. See, this year we are expecting, coming year, that is 24-25, roughly about 7-8% in the volume growth overall. And there will be inflation at least by 2-3%. So definitely, we are hoping. And added to that, so Kenya just we started. So that is going to now give an advantage for the next coming year. And also feed also now new plant has come in only a couple of months back. So that in feed also we are expecting another 100 crores additional revenue. So all these, definitely, 15% revenue growth is very comfortable. That's what we are looking.
Okay, so for FY25, you're saying 7% volume growth is still doable despite the grammage cuts that we have taken.
Yes.
Okay. And also, because of this muted volume growth across the industry, right? Are there any thoughts or of the other industry players as well as us, in terms of restoring back the original volumes per packet or restoring the original grammage per packet, or let's say reducing the MRPs or something of that sort?
I don't think so, because I think never has it happened historically. I think for the past 25 years that we've been operating in India, the reversal has not happened. There might be the things in terms of if the prices further come off and if procurement really does stop dropping, then we might increase the volume to maintain the current margins. We might not try to expand the margins exponentially if there is more production coming in. We might then take back the volumes, but I think we will try to keep the margins in the current positive trend. If you get another price, let's say if you get another volume price decrease in procurement and our margins are going to be shooting up further, we rather try to keep the consumer comfortable at that point of time by giving more volume rather than trying to take some larger margins.
Slightly there will be a price pack correction, but not the price.
Understood. And lastly, so this was a change this time that, for the first time we went on TV. Right. So is there any structural change in thought process here? And, let's say if we are able to maintain our margins in the high single digit to low double digit kind of band, then do we see, our marketing spends going up? Because today, as we see, market ad spends as a percentage of sales is almost negligible. So structurally, do we see a shift here in ad spend?
We will see a structural shift in ad spend, ma'am. Like we said, now we are trying to look at a larger growth structure in the overall period. We are first buffering up our procurement so that as we go forward, we never run short of a product to sell, and also trying to move into the more the brand visibility and getting it to be a more stronger brand from where we are now.
Right. So despite all the, let's say, the marketing or the ad spends, kind of going up, we still aspire to be in that high single digit to low double digit kind of margin.
Sorry to
interrupt. Yes, ma'am. We will continue to do that, ma'am. Because of overall our other profitability that is coming, we'll continue to maintain.
All right. Thank you and all the best.
Thank you, ma'am.
Thank you. The next question is from the line of Bhavesh from DB Investment. Please go ahead.
Hello. So thank you for the opportunity. Can you hear me?
Thanks, Bhavesh.
Yeah.
Thanks again.
Can you hear me now?
Yeah, go ahead, Bhavesh.
Yeah. So I have a couple of questions. Like the first is on the inventory front. So we saw a build-up of inventory in H1. So just wanted to understand what is the current state of inventory and what are the year-end numbers we are looking at. And second is on the front of, we saw certain resignation by CFO and head of sales and marketing. So is there any change in the top management position we are looking at further ahead?
Repeat. So the inventory part I understood, Bhavesh. What is the second part of the question?
Second part is like we saw resignation by CFO and head of sales and marketing in this quarter. Mm-hmm. So any changes in top management going ahead?
The change in top management, no, we've already, I think we'll be making an announcement shortly about the new people coming into play, which is already, I think, finance we've already decided, and also marketing we have found, because we're also looking at like we said, major structural shift that we'll be doing as answering to the previous question. And regarding the inventory build-up, we will still be, yes, the inventory will be higher than compared to last year, because we're going and improving our procurement and taking our own milk to a higher level. The exact numbers will be able to.
Yeah. The last March also we were holding roughly about 150 crores inventory. So right now, 9 months ended, we have roughly about 350 crores. Maybe by end of March it may become 400 crores. But net it will be only around 280, 300 crores. The net inventory will be very high. But after March also, normally we used to buy every year. Normally we are buying around 3,500 to 3,800 tons of SMP. So that is not going to happen, because since we have enough stock. Number two, and also last 2 years we have seen 2023 and 24 also, we used to buy butter. See, last 23 we have purchased around 500 tons, and 24 we also purchased 1,000 tons of butter. So now this coming year, since we have a stock, there won't be any SMP or butter purchase. So net, after consumption, whatever surplus is there, we will sell into the market. So selling market happens only after March.
So that is what the inventory position is right now, sir. So we won't see much. I think we'll see only maybe a 50 crore side up to 100 crore of a differential in terms of surplus shortage. But we need to keep that going if we want to get more growth. So with the growth is in view, we don't mind keeping the additional inventory.
Okay. Thank you so much.
Thank you. The next question is from the line of Vandit Dharamshi from Alpha Info. Please go ahead.
Congratulations on great set of numbers. 3 questions. First, regarding say from a 3 to 5 year trajectory, what kind of advertising and promotion spend are we looking at in terms of percentage to sales?
In terms of percentage to sales, the advertisement spend will be, I guess, not even more than less than 1%. It will be only in the point. We try to think a maximum of 1%. Maybe we'll range between 4 to 4.4 to 0.7%.
Okay. And second question is in terms of employee expense. I think as we do some new hiring, we might see that go up, and this quarter seems to be reasonably lower. So how do you see that part moving?
Employee expense, we will normally have that increase on a yearly basis, sir. The 10% of the growth in employee expense is something which we normally will maintain. But on a per liter basis, we keep track of it so that our growth also compensates the cost of employee expense.
Okay. And last bit on Maharashtra plant thing that you spoke about. So before we come up with a plan, do we plan to do a soft launch in Maharashtra in terms of sales?
No, sir. This plant is more in terms of procurement and then converting it into products that we already need. But yes, the soft launch will be in the area surrounding Solapur that we will be operating. Not necessarily that we will say that we'll enter into Maharashtra state as a whole. But it will start more than a soft launch. It will start as a slow entry into Maharashtra. Sales in the Solapur in and around, and then move forward.
Got it, sir. And lastly, on tax expense, we should just normalize it at 26-27% going ahead?
Yes, sir. It will be normal 26-27%. There's only one time that we explained, Murli, that we don't keep money in Africa. We try to keep it for some time because we wanted to get a tax residency certificate in Singapore. But it was getting a little delayed, so we didn't want to take the risk of keeping money in Africa, so we moved it to Singapore, and that's the reason the tax impact.
Okay, sir. Wishing you all the best for the future. Thank you so much.
Thank you.
Before we take the next question, a reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good evening, and congrats on good set of numbers. I hope I am audible.
Yes, Nikhil, you're audible. Please go ahead, and thank you.
One bookkeeping question. You at the beginning of the call, you gave the curd sales amount. Can you just repeat? I missed it.
1 minute for the quarter, right?
Yeah, for this quarter.
For the quarter of 24, curd sale numbers.
Curd sale.
Curd, you want quantity? Sale number.
Value. Value is 152 crores at the consolidated level. Right? And the 20.9% is that. And what we told also, we told that the standalone number of curd sale, that is 132 crores. 132 crores is the standalone curd sale number. 152 crore is the consolidated sale number.
Okay, fine. Thanks for that. Secondly, sir, now if we look at it, we've moved from the journey of 7-8% to now probably 10-11%. And you've talked on the call that the focus would be on growth. But that is on the volume of the milk sales. But on the value-added side, in the previous question you said the ad spend will not be more than 0.4 to 0.7%. So if you have to understand on the brand creation on the non-milk part of the segment, how are you thinking about it, and any areas over the last 9 months or a year where you've seen better traction on the non-milk or the value-added side, and which would be the product categories other than curd where you believe we are getting good traction?
So the 1% that we were saying earlier in your first question itself, because normally the dairy industry or volume, I mean, if you look at it as even assuming a 3,000 crore kind of a revenue, the ad spend, even if I take it as 1%, would be a 30 crore kind of an ad spend. So it is not the money that we're spending, but also to learn how effectively to spend the money is why we'll have to be careful and get the traction on the ad spend. Even when you come to see the value-added proportion, like we were always saying earlier, because considering the overall growth that we look at, as the pie increases in terms of the milk sales and the value-added part of it, we are still assuming that it will grow by the 1% to 2% in terms of the growth in terms of the value-add. Value add, if I look at the fat and fat add, it might sometimes accelerate further because earlier we were not concentrating much on the fat sales and the fat sales were coming down. As we go forward, we will look at fat as another category. So a major driver will come from fat to start with in terms of the value-added expansion happening other than curd, followed by the host of other products. Although our base of ice cream is very small now, we are looking at even the ice cream adding to a little bit more of the base sale, and that will also increase. And that is where we look at it for the short term. So between ice cream and ghee, other than curd, we'll see a push coming in from the value-add side. Other products will also increase, but in the same smaller, because the overall contribution will be smaller. We will get the sweets, flavored milk, lassi, buttermilk will also continue to add to that. So we will be confident that 1 to 2% increase in the value-added sale portion going forward on a yearly basis.
Just one question here. See, when we move towards more fat-related sales, will it not be more dilutive to the gross margin for the value-added product segment? Versus what we make?
Consumer sales, no, sir, because fat also has a significant margin when you're doing a consumer sale. But fat, of course, has the variability because unlike milk, fat, if the prices are low, sometimes we bring down the consumer prices and increase the consumer prices. But it's still B2C, fat has a higher margin than milk. It might not be as high as curd, but it's better than milk.
Okay. Sure. Thanks a lot.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Piyush from Aquin B Ventures. Please go ahead.
Hi, sir. So wanted to understand, will we have to slow down our procurement in case, so right now we are self-sufficient in terms of what you're procuring from outside, but in case your sales volume do not ramp up, will you have to move into more wholesale sales, or what is the direct to consumer, what is the consumer sales that you're doing now?
So we have primarily will concentrate on actually accelerating the consumer sale, not looking at selling it in terms of commodity. But because to match it is very difficult. Earlier we used to match on the lower side, erring on the side of not having enough volume and buying. Now because we're looking at the growth stage as we're going forward, we will look at it as erring on the side of selling a small portion of the commodity rather than ending up being net buyers. So our focus will be to remain a B2C. This bulk will be only maybe a correction factor in case we go wrong.
Okay. And so what kind of margins generally do you make or is expected in a bulk sale compared to the consumer sale? So 10% is what you make right now. So bulk sale
is always because the commodity is also, in the year when there is a lower price, you might even lose a bit. On a year when it's shortage, will make it higher. But when we look at it as a composite of the milk and the commodity, it will not hurt as much because if the commodity prices are going up, which means that there is no milk in the system. The commodity that we hold will give us an improvement in not helping the milk margin. If the commodity prices are not going up, it means that the milk prices are remaining lower, then the milk business itself will make the margin which is higher, which can afford to take even if there is a slight drop in the commodity price. So net we will not face much of an impact because I think this whole commodity surplus might end up to be 3% or 4% of the overall. It won't even be higher than that in terms of the revenue.
Okay, and we will stop at that, right, sir? We won't shift, in case the consumer sales don't ramp up, we won't shift the bulk of the sales towards wholesale, right? You would rather prefer slowing down the
wholesale will only be 3-4% at the most, because the core is still a B2C. We are not becoming, adding just for the sake of adding commodity.
Yeah, so that DNA remains. That DNA will remain going forward as well. Okay, thank you so much.
Thank you. The next question is from the line of Vivek from New Mark Capital. Please go ahead.
Sir, thank you for the opportunity. I actually missed the numbers on realization and purchase price per liter. Could you provide that for standalone and Concall?
For the quarter rate or for after 9 months?
For the quarter.
Quarter sales realization consolidated level 57.49, sir. Standalone of India is 57.87.
And procurement?
Sales realization in terms of rupees, sir. 57 rupees 49 paisa for sales realization, Consol, and 57.87 standalone.
Yeah, and procurement price for standalone and Concall?
Consolidated 37.67, standalone 38.71.
38.71.
Yeah.
Okay, thank you.
Thank you. The next question is from the line of Shreyash from S1 Investment. Please go ahead.
Hello, can you hear me, sir?
A little bit of echo, Shreyash, but yes, go ahead, please.
Sir, you spoke about advertisement some time back. So just wanted to understand what has been our ad spends for the last 9 months and what do you envisage it will be for the whole year?
I think the ad spend for the last 9 months has been also very small, sir. It has only been, I think, around 7 odd crores, which is there. And going forward also, maybe it will be another couple of crores this year. But for the next year, it will also be a little more than this. Maybe we'll go to around 15 crores is what we are looking at, sir.
Yeah, the 7 crores also mostly it is a POP, a wall painting and POP, and just we started only this month only with TV ad. So maybe these 3 crores it will add, mostly totally it will come to around 10 to 12 crores. Maybe next year, every month, we are planning adding to a little more.
Okay. So, but sir, in the presentation, we mentioned that other expenses have increased by about 171 odd bits over a 9-month period, and that has been driven by advertising and marketing.
It's breaking up, sir.
Hello?
Yeah, go ahead. We're breaking up for the last question. Please go ahead, sir.
I was saying in the presentation somewhere we are saying that there has been an increase about 173 odd bips in other expenses due to rise in marketing and advertising costs. But so you're saying 7 crores we did 9 months. So so is this the correct understanding that all of this other expense increase has been due to advertising and marketing?
So what happens for advertisement will be this, but we have other things that we do for marketing, like our freezers that we give and provide in the market. So all those, like I was explaining earlier, that we're looking at expanding our marketing depth and presence, is where we're spending on more of those, sir.
Yeah, other than that, in the third quarter, so we spend some money in, some schemes.
Some schemes, yeah.
See, because of that, this particular quarter, it is showing like that, sir. In Bangalore and Chennai, Bangalore market and Chennai market, we operated a scheme. With that, especially this third quarter, it's showing like that, there's a marketing expense slightly higher. But in the overall pie, it's not much.
So advertisement what is classified as separate line item, the sales promotion, the credit notes, whatever we give, those things will be netted off in the revenue.
Sorry, I didn't get the last point.
Now, the promotions and all those things is a separate line item. What advertisement is a separate line item.
So what we were talking about earlier was only the advertisement.
Advertisement cost. Whatever the other promotions are there in the part of the other expenses. Apart from that, based on the volume increase and the other normal.
That is what we are setting in terms of 175 bits expansion. Yeah.
So what would the number be combined, marketing and advertising, including what is the last figure?
look at both the numbers combined till.
Marketing. Only marketing, for 9 months this time we spent 7.2.
1.74, this plus. Yeah, our line. I think we'll get back to you, sir, or we'll get back to you later. We'll have a look at the other line items and get back to you, sir.
Sure. Okay. So my second question is, you said that we want to focus on volumes and that's why we're building up inventory. And also, somewhere I think I heard that you're saying 100 to 150 odd basis points of improvement in your value-added product. So just wanted to understand how comfortable are you with these kind of margins, or this is a one-off this quarter because of higher VAP and you think 8.5%, 9%, 10%. So what is the number that ideally you are targeting internally over a 2-3 year period?
So the number on the VAP is what we're targeting, sir, is what we asked for.
Hello?
Your voice is breaking.
The number in terms of the VAP is what we're looking at, correct, sir? Hello?
So what I'm trying to understand is, you mentioned earlier that you want to focus on volumes and growth, obviously. So this kind of EBITDA margin that we've done this quarter, just wanted to understand the sustainability of this and what are you looking at in terms of a 2-3 year horizon for the company?
So 2-3 year horizon, normally we look at higher single digit to the double digit margins. So in terms of whatever the cyclicality of the season happens. Like I was explaining earlier, normally whenever there is a bill procurement price increase, by the time we transfer it to the customer takes a lag, 1 or 2 months of lag in terms of by the time we stabilize. And at those type of years, we see a slight drop. But whenever the procurement corrects, that impacts the bottom line immediately. So we will be looking between that 8 to the 10% kind of ranges is a standard price range that we look at.
Okay. And sir, last question, what is the average shelf life of SMP that we hold in our inventory?
SMP will be 18 months if we are able to hold it under good conditions. And butter under refrigerated can also be 18 months.
Okay. Okay. All right. Thank you so much and all the best.
Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask question. The next question is from the line of Ramesh, an individual investor. Please go ahead.
Thanks for the opportunity and congratulations for the great result actually. So I just have 2 questions. One is I saw your procurement volumes increased by almost 36% quarter on quarter. So are we converting everything into butter SMP or are we selling in bulk?
We are converting it SMP and keeping it with us. So we are not selling any bulk milk.
So what is the quantity we are holding butter inventory? Because since it is a flush season currently, is it not risky to hold butter?
No, so butter is much easier to hold. Butter only, the holding cost is higher because you hold butter under minus 20 degrees centigrade. It has a shelf life of almost 18 months. Is what the risk is. There's no risk other than the risk of the price. The material spoilage is not a risk at all.
The main point is, since we are getting the butter at cheaper prices in North market and all, will it not affect our prices of fat and all? Since you are holding it.
No, so not right. The BVK was explaining earlier, normally in the month of November, December, January, when you look at it at the northern butter prices, they are already, the people who are not able to hold the stock will come down. But if you look at the larger players like Amul or Nandini, their prices will never change. They'll be the same price. So the larger players will hold the prices, will hold the stocks and then sell the price when there is in terms of when the demand is higher. So we are not in a necessity to sell now because we are not under any kind of pressure to sell. We are able to hold the material, we have money to hold it, so we hold on to it. And as BVK was explaining earlier, I mean, in another couple of months, we will know exactly where, because we used to be net buyers of butter and powder for our own requirement, which this year onwards we won't be there.
So currently, how much we are holding our butter inventory? What is the level of our butter inventory?
I think fat, the butter inventory we are holding in terms of tonnage, sir, exact number BVK will give you. Butter should be around 800 watt. Go ahead, BVK.
No. See, the butter is roughly about 4,500 tons and SMP also 5,000 plus. And normally, see, SMP, our own consumption itself, 3,500 to 4,000 tons, our captive consumption. And butter also, we have a captive consumption, not for the fat sales, captive consumption for milk. See, because, during summer months, when you have shortage of milk, because of our full cream milk is going day by day high and high. So we consume butter itself in the milk 1,000 tons. So hardly we become a surplus S&P only 1,500 tons. And whatever fat we have surplus of 3,500 tons, that we will sell only when we get a right price. Because being a flush season now, everybody will be offering a lesser price in the market. We don't want to sell it for the distress price.
Understood, sir. Thank you. That's the only thing.
Thank you. The next question is from the line of Priyank Cheda from Vallam Capital. Please go ahead.
Yeah, hi. So my question is on the procurement prices have reduced quarter on quarter by almost ₹1 per liter, while your realizations have remained flat. So is it fair to assume that now there would be further the benefit would be passed on to the consumer in the coming quarter, which leads to the gross margin expansion which you have seen in this quarter on quarter would again normalize it?
So, see, I will tell you, sir, the procurement price, if you see the first quarter, 39 rupees 62 paisa, and second quarter is 39 rupees 07 paisa. So hardly it is only a 55 paisa, less than 50 paisa of the variation between first quarter to second quarter, and between second quarter to third quarter is 38 rupees 71 paisa. So in the procurement, first quarter, second quarter, third quarter is not much variation. So 39.07 to 38.71. And therefore, we are coming to a question of the next quarter, sir. I think we will maintain steady state, even if the prices, unless the procurement prices come down further, is when we will think of looking at volume expansion. But if the prices don't come down, we will maintain the status quo.
No, so if there is not much difference in the procurement prices coming down, what explains the 300 bps of gross margin expansion quarter on quarter? While I do reckon that value-added sales have broadly remained flat. So what leads to this with very sharp jump in the gross margin quarter on quarter?
So the difference in the the jump in the quarter on quarter is 2%. It's only 2%, sir. So if you look at the cost, I think we'll see that there'll be a 2% difference. Sir.
Yeah. That 30 paisa, whatever is there, that results into gross profit.
So I'm looking on a quarterly basis. You have reported a gross margin of 30%.
Basically, there are two things there. Based on the product mix also, our selling price also increases. So what is it? It's a 57.58 to 57.87. There is a 30 paisa increase is there in the selling price, and then there is a decrease of 30 paisa in procurement. So because result to 60 paisa, it is almost.
So the difference, if you look at broadly, you're looking at a ₹1 difference. Sir. Yes. 60 paisa comes only in the price difference that you're seeing on a per liter basis. But if I look at it as what we call as the definition of the liter, because what happens is the liter that you purchase and the liter that you sell will not necessarily be the same. Meaning that if I buy a liter of 4.5% fat or 9% SNF, and if I'm selling a liter, it will not be the same. So the remaining difference comes because of that liter difference. So that is why you find that ₹1, the 60 paisa to ₹1 difference that you see.
Understood. So this means that in the lower cost of inventory which was procured earlier has been sold at a higher price in the current quarter. This is kind of a timing difference, right? That explains the 200, 300.
What we are talking in terms of the product mix of the liter itself will also add a little more. So broadly on the price to price, you will see a difference of almost 60 paisa, and the ₹1 that you're looking at as a gross margin difference. And the remaining 40 paisa comes due to the other factors.
Like toned milk have a different fat, full cream have a different fat. So based on that mass balancing, the margins will vary.
And when we say the guidance on the EBITDA margins is high single digit to double digit, is it fair to assume that gross margin, we are not building up any gains on the gross margins? Whatever gains should come on the operating expenses.
We can assume that because the gross margin will continue to maintain the same status quo, and the operational efficiencies will enhance the margin. Because of this gross margin level, what we are looking at is a higher double digit. So the further expansion of the margin will come only from operational efficiencies, not from the gross margin.
And when we say maintaining the same gross margin, will you mean 9-month average gross margins, or the current quarter gross margins are the fair representation?
I think we will look at the average gross margin, sir, not considering the current quarter, because I think the fourth quarter we will be able to see the same kind of gross margin. I think coming forward for the year, we will have to make a call in the middle of this quarter to see if whether sales are increasing, because if the sales volume tend to start increasing like we were saying earlier, we might even see a slight expansion.
Got it. And just a last question on the in-house consumption of fat and SMP. How much of that, so you did mention that you are consuming around 4,000 tons of SMP, right? This was completely for in-house?
Oh, no, sir. Basically, earlier whatever we are purchasing was for only in-house consumption, sir. Now what we have built up, because simultaneously we are also increasing procurement to go aggressively on growth, so we will maybe using a bit of this for our own. But whatever surplus is there, first thing first, if that much of pressure is there, it will be a small quantity to sell in the market.
And this complete SMP and fat was consumed to make curd, right? That is, there is no other.
Basically, balance the incoming milk and what we are selling, sir. Because we sell a lot more of high-fat products to the market. In terms of full cream milk, curd, to whatever it is, to what we are buying.
See, normally, because we sell a lot of curd normally we give a high SNF. So even though I get in a surplus milk, there will be a SMP consumption every day. And on average, we consume 10 tons. So out of, my 5,000 tons stock, so I will consume roughly about 3,500 tons SMP for my internal consumption. So I have a surplus of SMP to saleable to the market will be only 1,000 tons or 1,500 tons max. Butter also similarly, so 1,000 tons will be for my internal consumption, and balance only will be sold in the market.
And if you push a little bit of fat sales and ghee, that will also start to be consumed.
Got it. Thanks a lot for answering all the questions.
Thank you. Thank you, sir.
The last question is from the line of Shreyansh J from S1 Investment. Please go ahead.
Hello, can you hear me?
Yes, sir. Go ahead, sir.
Sir, I just wanted to understand the other expenses part a bit better. So I'm looking at your 3 months other expenses, 86 crores last year versus 108 crores this year.
So you're breaking up, sir. Could you again repeat, sir? You're looking at the other expenses from last year to current quarter, sir?
Yeah. I'm seeing 3 months last year versus 3 months this year. So our other expenses have gone up, about 26%. And even if I look at it on a 9-month basis, it has gone up by 15%. And now when I look at your annual report, sir, the large 3-4 costs that sits there in your P&L, freight, advertisement is also a very small amount. So there's freight and there is power and fuel and consumption of stores and spares, right? So when you're doing higher value-added products, so we understand that there should be some kind of leverage that you should get in your other expenses. And even if I look at your ad spends you did last year, 9 crores. So even if I were to think of this as increase, this does not answer the question of, the significant increase in your other expenses.
Sure, sir. I understand this. So basically, other expenses include the carriage outwards as well as power charges and fuel and all that stuff. There basically what has done is 300 crores of whatever the stock we have built up. Okay? That cost also is part of the other expenses because as a line item. So that is one of the reasons. Apart from that, our internal volume also increases. That is also the reason the primary transport freight expenses have increased it. And diesel, fuel and all these are expenditures. Majorly these are the items for the reason for that.
So the percentage increase and the actual number will be a little higher because of the inventory build-up that we have.
Yes.
Okay.
This is the percentage of the revenue.
Yeah. You see, because revenue we are multiplying with the 13 lakh.
Also you see, last year third quarter to this year third quarter, the volume handling, roughly more than 3 lakhs is more lower.
So we have handled more volume also.
More volume.
Yeah.
Because of that, it looks all your expenditure.
And the percentage is higher because we have not yet considered it in terms of the inventory consumption.
Because value in a sale 3.8 increase, but procurement 36%, which is a substantial increase. When you divide the expenses divided by the sales quantity, it looks higher as a percentage as well as a per liter.
because all the inventory is sitting.
Okay. Okay. Thank you so much. I'll take this off.
Thank you, Red.
Thank you. As that was the last question, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for coming on to our conference call and being with us for so long. If any of you need any further information, you can contact us on our mail ID, which is already provided in our deck, which has been uploaded. We'll be more than happy to provide any further information that you all need. And once again, thank you so much for coming on the call and being with us. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.